Good morning, everyone. This is Brad Matheny. Today is the fourth Friday of April 4th, and got some pretty good big news today. So first off, my primary trending algorithm called the Mint Rotational Modeling System on a daily basis has gone bearish as of yesterday's close. So as of this morning, technically we are no longer based on my modeling systems, no longer in a bullish trending market on a daily basis. The weekly basis is still bullish. We don't have any rotation on the intermediate longer term trend, but on a daily basis, we have gone bearish. That means that if you have not already moved to 80 to 85% cash in your investment accounts, do it. And in this case, really consider strongly doing it, because the breakdown in trend right now would indicate that we do have some much longer, deeper potential trending. Now, overnight, the SPY, remember I had kind of drawn this. Let me come out to here. I think this is it. 30-minute. Go to daily. Yep, this looks like it. So remember, I had highlighted the ultimate kind of breakdown moving down into this 500 level, below possibly the 500 level. We've already extended down into this 524 level. So we've gotten a lot further than I had expected. Now, understand that I am looking at deeper cycles back over here in July, this area here, deeper cycle lows down in this area and down in this area. July, basically July and October, which is actually right down in here, and October. So now, given the fact that we're already down into this area, okay, and that this is a breakdown, as I had mentioned to you, of an A, I'll try to draw a shorter, of an A, kind of a B, C move down to here, that would mean that if we count this effectively and try to understand where we're at, instead of being an A, B, C, D, E move here to a wave one base, we're looking at potentially an A, B, C move, which would mean that we would have a roughly equal to, slightly greater than move here from this peak down to this area. It puts us at about 512, maybe a little longer, down in this 501 area. So ultimately, guys, at the rate this is moving, it looks like our target here is going to be based on these tariff moves down here into this 512, 505 area, kind of right down in this area on this big breakdown. Now, what does that do to your July low, Brad? What does it mean if we get to that 500 level that you predicted here in April, May? What it means is that we're seeing a pretty big breakdown, okay? And what it means is that we may actually see deeper lows if this low carries over, or if this is a move down into our ultimate low level, we reach the ultimate low level, potentially consolidate. So what it would kind of look like to me is if I were to come in here and say, well, what does it actually mean? If we hit this level here in April, May, gold and silver are really going to rip, because that's going to be a pretty big fear factor after a bit of a pullback. But I mean, I'm telling you, they're going to rip higher. But then, like I said, we reach the ultimate low. Typically, once we reach the ultimate low, whether it's at this point or down here near these lower levels, kind of like this, we will recover back up out, find some support, consolidate, and then maybe come down here into this ultimate low. So it doesn't change much other than the fact that, instead of moving into that deeper consolidation range that I expected here, what happens is we've now transitioned from an A, B, C move that was going to move down here in waves to a more aggressive move prompted by the tariffs and driving us into this deeper cycle trend down over here. And that deeper cycle trend puts us, okay, got to get rid of these Discord messages. Oh boy. That deeper cycle move puts us really kind of in this area. Okay, that's that A, B, C move down, if I am correct, and that's where we're at, given this big breakdown, already below the 530, 540 area. Then what we're looking at is we're looking at a fairly big breakdown where the target is going to be somewhere between 516 and 500, maybe a little lower. And that means that we're going to be looking at this big, deep A, B, C type of breakdown pattern. And I'll try to label it here. A, B, and C down here to this low. And now what that would do is that would set up a pretty solid pullback where we could A, move into a consolidation support channel, which may be this, moving up into this area here. Kind of channeling flagging. You see that here. Try to make those a little brighter, darker. Or it could mean that we would flag up, consolidate, and then flag back down on secondary news, meaning that we would potentially break down again back over here into the July low. So we could kind of end up into a double low here, which would mean we would come up, consolidate, and roll back down, then come up, consolidate, and then get out of it. So we have a lot of volatility in our hands. Remember this move, if I'm correct, from roughly this low up to this low is about 11, 12%, or this low up to this high. We got about a 12% range here. And what ends up happening, how this is going to play out at this point is almost anyone's guess. But, if we move into a deep low consolidation, we move across these levels as a range. So you can see here that we would essentially have flagging potentially across this 490, 500 area up to this 550 area. That's a pretty big range. That's a 50-point range, potentially setting up for that ultimate low that's going to be out here in July. So let's see how this breaks down, because this move, if it's 100% measured move or higher of that previous move, moving into a C type pattern here, then it's going to be an aggressive move down to about 497, maybe a little lower, 500. If it moves in series of waves, then I expect we're going to find some support right over here around 520, 521, kind of like I've highlighted here. I think we're going to find some support in that area if we get there. We're already at 520, 521 right now. So, it could blow right through that support level down to the downside. And then we are looking at this 495, 500 level, which was my ultimate low support. Now, you can ask, look at all this chart and tell me, oh, well, Brad, you draw everywhere. Yeah, I know I draw everywhere. I'm trying to impart knowledge onto you and show you kind of where we're at and what we're likely going to do. Remember, price is the ultimate indicator. I've been predicting this downward trend for months. I didn't predict it to break down this hard, but I didn't predict tariffs to come at us this hard either. So, as I mentioned to you, news can sometimes alter things fairly dramatically. I'm trying to get that little thing out of there in the back. So news can alter things fairly dramatically, and especially when it's affecting global markets. So at this point, like I said, ladies and gentlemen, We're looking at a pretty big breakdown. We're looking at the 522. Now, I will argue that, this is a huge overnight breakdown. Really quite big, 3-4% over here. There is a potential that we could find support right here at 520 and try to rally back up. But today's pattern is a breakaway in trending mode. I honestly believe that the downward pressure related to the tariffs and related to the tariff wars on the markets is going to probably create this big flush down type of pattern where we roll and then build our base back up in this area. So it's probably a pretty good chance you're going to get a very excessive breakdown phase here into the 500 area before we roll back up and try to find support. Remember, this is very unusual time. As I told you, this is the greatest opportunity of your lifetime. Okay, QQQ. Trading at 537, ladies and gentlemen. Trading right, or 437, right down here in this area. Really breaking down. Here's the ultimate low level. We're not quite there. We're at this last little support here. And yeah, I would argue that if we get below this support level, then we're going to look at a breakdown very easily targeting this ultimate low level. So, we really got to be cautious here. And again, the same type of thing here. See if this is a pen. It is. If we move into 100% measured move or slightly above 100% measured move, as Fibonacci could do, we're looking at, pretty easy 400, 399 type of area as support. Okay. If we move into a big breakdown here, about 100% of this move, a little over, call it 120, 130%, roughly Fibonacci numbers. By my estimates, you're looking at a breakdown down here to 380, 400, somewhere around there on the NASDAQ. So yikes. And again, it could be news driven. Nobody's really, as I was telling my family yesterday, I had a long conversation about these tariffs, and nobody's prepared for a 20, 30, 40% slap on the forehead loss of economic activity. Nobody in the planet is prepared for that. So, that's kind of what Trump has done by levying these tariffs back on other nations, is they've been hitting us with, tariffs for decades. And Trump came out and said, this is unfair. And he immediately imposed tariffs on these foreign nations, which, you think about it, if the tariffs are 30, 40%, that's almost like saying everything you ship to the U.S. is going to cost 30 or 40% more. And that's access to the premier market on the planet. And guess what? That equates to about a 25 to 35% or more percent hit on their economy, at least the economy that ships to the U.S. So, that's a pretty big thumping on the forehead. And again, we'll see how it plays out, but obviously it's not positive for the economy. If the tariffs are reduced, if it's negotiated down, if there's some resolution to it, then we're going to probably roll considerably higher. But right now, like I said, I think we're going to probably try to find lows in this 380 to 400 area on the NASDAQ. And remember, these are the same levels I've been kind of talking to you guys about for months. So we're just getting here a lot quicker than my July level, it looks like. We'll see. We'll see how it gets there. Again, if we come down and move down into this area and then find some support, we could move into that ultimate low later. But let's just see what happens here. Okay, let's come over here and go to gold and silver. Gold and silver, well, silver's been in this is hourly, been in this big solid breakdown. I mean, it's, you can see silver has reacted very aggressively to this breakdown. I still believe this is panic. Okay, I believe this is panic selling of gold and silver related to the tariffs. I think silver is reacting to it much more aggressively. And again, we've seen a tremendous breakdown in silver, 12%. But I will tell you that I believe, and I'm going to just say it again, that normally we will find a base, wherever that is, base around there for 2, 3, 4, 5 days, and then we will begin a rally right back up here because metals act as a very efficient hedge. And right now, hedge is not in the picture. This is an indication of panic selling. This really is a very clean panic selling mode. So be aware that you're going to find a bottom at some point. You're going to find 3, 4, 5 days of basing, maybe a bit longer, and then you're going to find a very solid recovery back to the upside. Now, gold is going to be doing the same thing, but gold is holding up much better in this area, and we could eventually see a pretty solid rally phase back up into this 33, 34, 3,500. And I've drawn all these lines. Try to get rid of some of them. So understand, we're really looking at this target, 3,300 plus area, and gold will settle and hedge the risks to the global market. Remember, and this is what people don't understand, there are hundreds of trillions of dollars at risk in the derivatives and global markets. You've got all these central banks that produce at a GDP level that have produced debt, and that debt and that capitalization has moved into normal banking and finance arenas and also has moved into derivatives arenas. So by my estimate, there's somewhere between 450 trillion and 700 trillion dollars worth of, total debt, total risk out there in the market. That's a lot. And I don't think gold and silver have adequately reflected that risk. So this move in the markets downward today could very easily present a very strong a correlation for metals to be able to rally over the next 6, 8, 10, 12 months. Okay, so now the gold cycle pattern is a crush pattern in trending mode. Bullish. Yeah, this hasn't changed yet. It's been a sudden kind of a breakdown. Silver is breaking down hard, already crushing. I mean, look, silver's down almost 3%, almost down $1. Gold is off 16 bucks, almost 0.5%. So you can see the difference. Silver's down 3%, gold is down 0.5%. Not that big of a move in gold. And I believe the crush pattern, again, how it plays out today, could already have been played out overnight. These are huge moves, really big moves. So this may already be fairly well played out. And then lastly, we're going to come back over here without going too long to Bitcoin. Bitcoin's holding up. Really, I would almost say that Bitcoin is in shock here, kind of not knowing what to do. It's not making any big moves up. It's not making any big moves down. We're getting weaker and weaker volume comparison to the SPY. You see here we're getting very big volume. You see right down here, huge volume over the last couple of days. So Bitcoin is almost like, standing on the sidelines, not knowing what to do. There's really been no trends. And because of that, we're not getting any big directional moves here. I still believe it weakens back down into the 73,000, 78,000 area eventually, but we're getting nothing. It's almost like it's in shock, standing on the sideline watching the train wreck happen. Okay, so no big news for Bitcoin. Gold and silver are likely going to be trying to base and bottom out of this. And like I said, the SPY and the NASDAQ are really, guys, we're moving down into that lower channel. We're already below it. If we get a big recovery up off of this level, then look, we may end up holding up above the 520, 525 level today, moving back up into this upper channel. But we'll see. If we break down, if we really do break down, we're going to be looking at at 500, 490 on the SPY pretty quickly. And that would be a full 100% move down off of this level. Again, it's pretty simple to do. Show you how to do it. So I'll do it with the, where is it? The highlighter. Draw a line, 100%, copy it, come back over here, and there you go. Takes us right down to 509. That's a 100% measured move. And so now if you extend that down about 25, 30%, that puts us into the 487, 490 area. So that's a good way of looking at Fibonacci 100% measured moves and targeting levels. So really, our first target is going to be right there, 508. And that's kind of odd because that came right into my lower levels over here. Remember, I've been talking about 505, 500, 490 for weeks, months. And how does that play out? Well, basically, it ends up being a true Fibonacci ratio, which is why I kind of draw these things in Fibonacci mode anyway. But again, right now, we're going to watch for this breakdown. I personally believe that this is a bit overextended. I'm going to go look for news. I personally believe that this is fairly overextended given where we're at. And I think that we should be really cautious of a moderate pullback back up here into maybe 550, 555, maybe 560. But, at this point, the tariffs are really causing a lot of damage. People are reacting, countries are reacting, traders are reacting to it. And until we get that extreme oversold mode, the downside risk outweighs trying to pick up a bottom. Don't pick a bottom in this move. Wait for the bottom to come. Wait for it to set up. Don't be trying to buy into these lows thinking you're going to be a genius and it's going to rally 700 points. At this point, guys, the train is going down. It's moving down, and you do not want to jump in front of this train. It will roll you over 6 ways from Sunday and keep backing up over you just for fun. So try to avoid the risks. Okay, guys, if you're doing anything and you're not sure what to do, just sit patiently. This is already a very big move. So sit patiently, wait for the first hour or so to play out, see what happens next. It's going to be a crazy Friday. Okay, guys, talk to you later.